Joining us now is BMO Capital Markets Equity Research Analyst Joel Jackson. He has an outperform rating and $125 target on Albemarle. Joel, welcome. 125 is about 50% higher than Albemarle is now. Why the optimism around the company?
Look, if you take a mid-cycle kind of assessment, and most investors we talk to when we survey them are willing to give lithium miners, lithium producers, an 8.5x EBITDA multiple. You apply that to a decent mid-cycle price, about $15,000 a ton, a few thousand more than today, you get about $125. So we think that's a good mid-cycle number. It's enough to encourage the right amount of new supply to come on, but nothing to oversupply the market.
Albemarle will move, not entirely, but largely on the price of lithium itself. So what are the trends for lithium, the mineral?
Yeah, lithium has been in oversupply. We have a surplus. We have too much production coming out of places like China. We did not see supply rationalization. Prices fell and fell and fell, got down to about 60,000 RMB a ton, or $8,000 US a ton. And we finally started to see a little bit of movement now in China. Assets have been running underwater, losing money, are starting to now shut down or be shut down. We might see more. That's what's caused the excitement of lithium price to bounce off the bottoms, that we might get some supply side rationalization and maybe a more rational industry.
Is that because there's too much supply or not enough demand? Did companies and the world really overstate the rapidity of the rise of lithium?
I mean, that's a complicated question. Demand's been fine. Demand's been running about 20% demand CAGR for lithium. I think that may go down to the mid-teens as we get more mature at EV markets. But I think supply has just outstripped demand. We're running 150,000 ton surplus right now. New capacity showed up for mines in Zimbabwe, other parts of Africa, in China. I just think supply got ahead of what was really strong demand. And assets, again, we're running underwater, and that just can't continue forever.
Albemarle, it's easy to make the bull case for Albemarle, right? Like, this is the largest lithium producer in the United States, one of the biggest in the world. We're going to the electrification of a lot of things. Lithium's in almost every battery, at least right now. And the stock was well above $100 about a year ago. What is the problem, if any, with Albemarle? They just replaced their COO. How is the company itself executing?
I think what happened was more supply came in places like China after than expected. And Albemarle has done a good job in this environment the last couple of years of circling the wagons. They've cut costs, they've cut growth CapEx, they've got leaner. They've made some organizational changes. You mentioned one of them recently. But I think that for them, they just have to sort of ride by here, let the industry rationalize a bit better, and they should be fine. But they're not doing anything crazy. They have cut costs, and I think they're doing the right thing. The risk is that lithium prices stay below marginal cost for a long time, and then you've got to cut more CapEx and more growth projects. And then, yes, EV's a growing market, but the risk could be Albemarle's got a balance sheet problem, or maybe they can't invest in growth anymore. So in a growth industry, they have no more volume growth after, say, 2027. And then you don't deserve a higher multiple. You deserve a lower mining multiple with no growth in a growth industry. That would be what's really made the bears and the shorts on the stock, win the game for the last year or two.